Hey stock and options traders, welcome back to the channel. If this is your first time here, my name is Karl with a K, and I've been trading stocks and options online since the mid-1990s. If you're here to learn about trading or to figure out if a stock or options course on YouTube is worth the money, then make sure to subscribe to the channel. One of my goals is to change this industry. I want to change the buying criteria when anyone wants to buy a stock or options course on YouTube. If promises are made by a YouTube instructor when selling a course, then I believe they should prove their credibility. And I see only one way to prove credibility, and that is to share P&L. Not only share P&L, but also share the account P&L volatility, which means, did the account value move up or down significantly? If your account made a 20% return, but it was down 60% at one point, then the 20% return is not really a good return on risk. Sharing the P&L volatility is important because risk-adjusted returns are the real truth. And this is why I share my P&L and I show my daily moves of my P&L. Now, I would not buy a course from a YouTuber that makes promises without sharing their P&L, and I hope you won't either. In this video, I'm going to go over my real P&L for the month of January 2021, and I'm also going to have a special offer later in the video. I'm going to share my real P&L for the month of January 2021 for my two separate accounts. Before I get into the P&L, I want to briefly go over what the market did in January of 2021. This will give an idea of what my trading systems had to contend with over the last month. And my question always is, what type of market was January? In my book, I go over the 4 market types for premium selling options traders. And that is what my two separate systems are set up to do. They're set up to take advantage of the difference between implied volatility and actual volatility by selling option premium. Now the 4 market types are: number 1, the rising bull; number 2, the sideways market; number 3, the grind down market; and number 4, the crash market. So let me get started here by going over the market. Okay, so I always ask myself, what kind of market did we have in the last month? And that was for January. So let's see, we started here and we ended down maybe 1%. So I would call this a sideways market for sure. We did hit all-time highs and come down to about here. So market's down around 4% from the high. Well, let's take a look at the volatility, see what that did. That's always a significant factor. So we started here. You can see that the volatility has risen pretty significantly, about 45%. So, when you're short volatility, that's going to play a factor in your portfolio when the volatility rises like that. So there you have it for the market. Again, sideways market, but volatility rising. Next, I'll get into my P&L. First, in my smaller account, where I trade the 5-step options trading success program. This is a system that is proprietary and took me over 3 years to develop as I kept racking my brain trying to replicate what I was doing in my larger portfolio margin account. I wanted to replicate this system in a regular margin account. I backtested over 300 different trade plans until I finally came up with a successful system that I could trade in a smaller account that outperforms the S&P with lower P&L volatility. I make these claims based on the last 10 years backtested results, along with about 7 months of trading it live. Even though it does not replicate the exact system I'm using in my larger account, it is about as close as you can get. My small account portfolio using the 5-step options trading success program is not dependent on picking a direction. So an unpredictable market does not have a negative effect on the trading system. If you're interested in the course, I provided a link in the description below. And for the next 5 people that sign up using the code in the description, I'm offering a $500 discount. Let me go over the results for the smaller account. Okay, so my smaller account is in the TD Ameritrade. As you can see, here is the month. If you remember, I started with $15,315, and you can see that we went down just a little bit here, up and down. I mean, I wasn't down more than a couple $100. Not a lot of volatility in the account. So you can see how the account did over the time. And I ended with $15,114. So let's do a little bit of math here. So 15,315 minus 15,114 is 201. So I lost $201, and that's just basically the fluctuation of the account. But that's what the balance is. So I'll divide that by 15,315, and I get about a 1.3% loss for the month, which is something I'll probably just make up in a day or two. It just depends. I didn't have any positions close out in this month, so it was a slow month, but you know, I didn't really do anything either. Just looked at the account every day, didn't need any adjustments or anything. But there you have it, down 1.3% for the month of January. As I've stated before, the edge in selling option premium is because implied volatility is higher than actual volatility 83% of the time. This system is designed to make money in any market environment while mitigating drawdowns. In the last 7 months, while trading this system live, my highest drawdown was only 1.3%. This is almost like a super high yielding savings account. Again, you can learn exactly how I trade in this account by purchasing the course, and I put a link in the description below. Be sure to be one of the first 5 in order to get the $500 discount. Now I will go over my larger account. This account has portfolio margin, allowing me to trade with more leverage in order to take advantage of certain trade structures. First, I will briefly go over my market view. Now this month, we have seen some crazy things like brokers limiting the amount of shares that can be purchased on certain stocks like GameStop and others. I think the big players that were short these stocks were forced to cover their positions and in turn had to sell off their longs, putting downward pressure on the overall market in the last few days of January. It also looks like some of the big players bought some puts at the 1 standard deviation level, bidding up the options at that price level. This caused an unusual demand for certain puts and caused a skew in the option chain. This skew, which is temporary as it always is, has put pressure on my portfolio margin position, and you'll see the results when I go over them. So here are the results. Okay, here you can see my larger portfolio margin account, how I did in the month of January 2021. You can see it started with about 146,000, not a lot of fluctuation through the account, and then we got to that those last couple days of the month, and you can see that the volatility spiked, and you can see that that has an effect on my portfolio, but that's just a short-term effect. I'm very positive that this is all going to recover. You know, by the time next month rolls around, you're going to see that that'll recover. In fact, earlier when the market was up on the last day of the month, the 29th, my P&L actually rose all the way up into here, but then towards the end of the day, the volatility spiked again. But as you can see, not a lot of fluctuation, but this is definitely down 5.4%. I mean, this is the worst month I've had since February of last year. I've made money every single month, I think, since then, or at least broke even. So this is a rare, in my opinion, a rare situation where I actually am down for the month, but I believe that I'll recover very quickly. So there you have it for my portfolio margin account for the month of January. If you want insight on how I trade this larger portfolio margin account, you can purchase my book, A Portfolio for All Markets, or you can check out the course I took that brought my options trading to another level from Ron Bertino called Trading Dominion. And I've left a link in the description for my book and for my review on Ron Bertino's course. And remember, if the P&L is not real, what else are they trying to conceal?